Hello everyone, welcome to IC Markets webinar. Shall we just wait for 2 minutes for everyone to tune in, and then we'll start the session shortly. Okay, so today it's gonna be Fibonacci Masterclass part 2. Okay, so today I'm going to talk about Fibonacci expansion and projection. Okay, and maybe the beginning of the webinar, just a recap on Fibonacci retracement and extension, which I just did like 2 weeks ago. Okay. Again, if you have any question, you can just leave all the question at the chat box below here. All right. Okay, so let's just like before we start the webinars, a quick look on news for entire week. Okay, so to like yesterday, there's no news. That's why the market is quite slow. The timing is that okay? They're gonna be UTC times. Okay. Later, they're gonna have a new CAD and USD that you guys need to turn it off. And tomorrow, they're gonna have FOMC. So I think either you're going to see gold is rising or falling, but I like short gold or I sell gold and still hold the sell position for gold. Okay, but I think Wednesday we're gonna see whether gold will like falling or continue or making a new high. And Thursday, Aussie and GBP, okay, and another one is USD unemployment claim. And Friday, yen, okay, they're tentative, so we don't know when they're going to release the news. So just need to be careful. And 6 a.m. GBP and CAD. So these are all the high impact news that you guys need to take note of. Again, if you want to, you know, take note of those like orange color, you can just filter here, but I personally just use the red, which is high impact news. Okay. Hey, hi Ajay. Okay, your name is Ajay, right? How are you? I'm doing good. Okay, shall we just start the webinar again? Before I start the webinar, disclaimer as usual, guys. Remember that everything in this video is educational in nature. Okay, nothing should be construed as investment or trading advice. If you come to trade, please do your own due diligence for the guide trade. Okay, risk warning over here. Trading forex and safety carry significant risk to your capital, and it may not suitable for all investors. So please come and join the webinar and learn together. Okay. And the agenda for today, I'm going to cover what are Fibonacci expansion, what are Fibonacci projection, how we're going to draw them, or I will bring you guys to the trading wheel and practice together, and how we're going to find Fibonacci confidence level. So basically, Fibonacci confidence is just all Fibonacci like line up together. They're gonna be like really strong zone or strong area. Okay. Introduce your host today. Some of you guys already know me. My name is Peggy. Okay, I'm an investment analyst and proprietary trader as well. These are all the prop firm that I have passed all the challenge. If you want to find our prop firm, I think you may just Google it. Basically, you need to pass all the challenge and then they will give you the capital to manage. But again, there will be the rules that you guys need to follow. Okay. A quick look on Fibonacci retracement. So basically, if you want to use Fibonacci retracement, right, you need to look for like the zigzag, or basically you look for market structure. Is it like very strong uptrend or strong downtrend? Okay, and look for the most swing low and swing high. So this is just a recap on Fibonacci retracement. Okay, and you draw from your swing high to the swing low for the downtrend. Okay. And for you drag from swing low to swing high for the uptrend. If for the uptrend, meaning that we're going to find the support, right? For the downtrend, the Fibonacci gonna act at the resistance. Oh. Hang on. I think. Oh, okay. I don't know where is my trading. Okay, if you are trade with IC market, right? If you have a C trader, you can connect all your account, okay, and trade on the trading views, okay. And I'm using the graph for IC market. Okay, this is my, is this IC market? Yeah, this is my IC market graph, right? This is all gold. That's why I'm still holding my sell position right here. So basically, okay, a quick look. If you want to draw retracement from swing high to swing low, right? A quick retracement, swing high to swing low now. In this case, okay, now they are acting at the resistance level. This is for the downtrend, meaning that if price from here, okay, here they acting at the resistance level, continue to go down. But if you draw from swing low to swing high, oh wait, just hang on. Okay, if you were to draw from, I think you know, from swing low to swing high, okay, sorry, this is gonna act at the resistance level because price will go up like from here, right, from here, acting at the resistance level and go down. If from swing high to swing low, wait, I think I'm getting blur. What I look here, swing high to swing low for the downtrend. Where is our swing high to swing low? Okay, this one, swing high to swing low. Well, you can see that it's a downtrend, right? In this case, like, you know, price is kind of like react up here and then continue to go down. This for bearish or downtrend. For the bullish, we draw from our swing high, swing low to swing high. This is now they are acting at the support level, which is like right here, and then they continue to go up. Okay, this for the Fibonacci retracement. These are the number Fibonacci retracement we are using: 23.6, 38.2, 50%, and 61, 78.6, and sorry, 61.8 and 78.6. Okay, if you see like 88.6 like Fibonacci level there, here, they're gonna be for harmonic. Okay, for Fibonacci retracement is all the number that we are using. Okay. This is just a quick recap. I don't want to go through too much because we already covered like 2 weeks ago. Okay, and this is how we draw swing low to swing high, acting at the support level. Swing high to swing low. You can see that price is kind of like retrace or react up at 78.6%. In this case, they're acting at the resistance level. Okay. Okay, now I'm going to talk about Fibonacci expansion. So basically, I'm using Fibonacci expansion using the same tools, which is Fibonacci retracement level here. Okay, but the expansion that I'm using, the number that is below 0%, which is I'm using two number, negative okay, these are negative minus negative 27.2 and negative 61.8. that is my Fibonacci expansion. Okay, we use Fibonacci expansion to, like, if there is no support or resistance, and then you will use the expansion to find the level. Okay. Okay, if you're going to buy position, you open where the price make a new high. Fibonacci expansion can use to where the price might move like sell, or you short. Fibonacci expansion can calculate it to find the profit target. Basically, it's here. Let me like go back here again. Okay, the expansion, there is a rules. Okay, price need to retrace at least, okay, 50% in 0.3, and then you can use Fibonacci expansion, which is negative 27.2 and negative 61.8, meaning that your starting point always 100%, right, and then ending point is 0. Price have to retrace at least 50%, and then you can use Fibonacci expansion, which is negative 27.2 or 61.8, which is over here, for example. Okay, right here, like over here, price is retraced more than 50%, right? Let me include our 50% is right here. So now we can use Fibonacci expansion, which is this the one, the level 1 acting at the support level, or level 2. Okay, usually I will use Fibonacci expansion or combine with other Fibonacci, like either retracement, extension, or projection, which is today I'm going to talk about projection as well. Okay, now the ending point is 0%, starting point is always 100%. Okay, now price really retrace at least 50%, then you can keep this level. Okay, now let's say price keep continue going down or break like support level, you can use Fibonacci extension. And what you can see that now the Fibonacci extension, this is the level that we're going to buy. Okay, like this the zone or the area that we're going to buy from this level, meaning that if price retrace at least 50% and then falling here, continue to go up, we'll buy from this level, this zone. But what we can see now, based on H1 time frame, price come and touch at the extension, which is I covered 2 weeks ago for the extension, 127.20. You can see that price ending or touching H1 with price action right here. Okay, if you want to trade, if price break below your ending point, which is 0%, if you want to buy up from here, you should close your TP at this level. You're not going to hold the level up to that level, because why? This is due to be your support level, right? Price break below, now it's acting at the resistance level. That's why we're gonna buy from this zone. I mean, I'm going to buy from this zone, because this zone I have Fibonacci expansion, I have extension. Okay, and now in H1 you can see that price ending with PA or price action. Expansion, projection, review before driving into expansion and projection. Let's review the Fibonacci. You just join, is it? The Fibonacci level, we use Fibonacci level. Okay, just now I already have a quick recap on Fibonacci level. Okay, the Fibonacci level I covered 2 weeks ago. If you miss it, you should just go and review. Okay, because if not, I cannot cover Fibonacci expansion projection. If you want to talk about like 0, 1, this is just the Fibonacci you add up together, like 0 plus 1 equal to 1, 1 plus 2 equal to 3, right? 1 plus 3 equal to 5, and so on and so on. So this one you just have to go back to like 2 weeks ago and then study Fibonacci level. Okay, I don't want to go too much on that. It's just that Fibonacci, okay, this is the level. Okay, and I believe that's it. If you want to talk about Fibonacci frequency like 1 plus 2 equal to 5, or this, you can Google. Okay, that is very basic one. I just want to teach you guys how to apply in the real chart. Okay, and these are the number that we are using for Fibonacci retracement. And now today I'm covering Fibonacci expansion, which is, I already said that Fibonacci expansion I'm using two numbers, which is negative 27.2 and negative 61.8, which is a number that below ending point, which is 0%. Okay, and these are the two that I'm using for expansion. I'm using Fibonacci retracement. Okay, and now how we're going to use the rule is that price have to retrace at least 50%. Okay, have to retrace at least 50%, and then you will keep the level for this number. Okay, for like expansion I'm using these two numbers, that is 27.2 2 and negative 61.8. Now you already see that price is retraced more than 50% right here. Okay, and then you can keep use expansion, because why we use expansion? The expansion is similar or like, you know, similar or the same like extension. Okay, because we want to see like if price break below, okay, your break below your ending point, okay, where the price is going to stop. Okay, because there is no support level here. Okay, we cannot find the support level, and then you can do Fibonacci expansion. Now you can combine, because we already covered extension. Okay, you can see that one price break below your ending point, which is 0% here. Below there we use expansion. Okay, and then you can do the extension from where? From the this let me include the starting and ending point. Okay, for the extension. Okay, I'm drawing the extension from here because price break below your, in this case, starting point. Okay, your starting point 100%, and then you can see that this is the zone, or you can call Fibonacci confluence level. Okay, we have extension right here. That's why one price come, you can see that price come to like close to the level or the zone. You can see the rejection or price action, we can buy from that, and then you should close from, if you want to buy here, this is going to be your TP as your pullback or overlap resistance level. Okay, okay, any questions so far? This is how we use Fibonacci expansion. Okay, and then we continue. Now extension we already cover. Okay, extension already cover. Okay, same for the extension, we use to forecast potential support and resistance level beyond the standard Fibonacci retracement level, meaning that if price go beyond your starting point 100%, right, then we will use Fibonacci extension to find the potential support or resistance in that case. Okay, and this is an example for Fibonacci expansion. You can see that starting point is always 100%, ending point is 0. Okay, price is retraced at least 50%. In this case, they can like retrace somewhere 61.8, and then you can use your Fibonacci expansion for your support level. You can say that this is your first support, and this is gonna be your second support, and maybe over here it line up with either pullback support level if you want to stretch to your left. Okay, this is another example. You can see that in this case price is reverse, okay, or leg up at negative 61.8 and then falling. You can see that one price, okay, this is our starting point, ending point, and this one is our resistance level. You can see that price break above, we're gonna short here. You should close your TP here. You sell here, you close your TP here, because this one is gonna be your overlap support level. One price break above your high. This is your high. Okay, now I'm going to talk about Fibonacci projection. Okay, you guys clear about Fibonacci expansion? It's quite straightforward. You want to use Fibonacci expansion. Let's just find another example. Just recap before I start Fibonacci projection. For example, here, let me just say that, okay, this is my Fibonacci retracement. Okay. $78.6. Okay. Okay, so you can see that, let's say, because these are the current price, swing high and swing low here, you can see that price is retraced at 78.6, 61.8% here, almost reaching 78.6, but then they reverse, right? You can see that they ending with price action. You can see that long wick here, and then price continue to go up, meaning that now if you were to draw Fibonacci, this is not gonna be your swing high anymore. Your swing high is right here. So you need to draw one price, make a new high. Your swing high is not here. Your swing high is here. Okay, and you can see that price did not pull back or retrace 50% right here. So we're not going to use expansion. Okay, we're not going to use the expansion because price did not retrace or pull back here and then to continue to go up. Okay, so now expansion is not work. We're not going to use that for the expansion. Okay, now go back to Fibonacci projection. Okay, so Fibonacci projection, you need to find the principle to use Fibonacci possible to target the level on either price is going up or going down by connecting 3 points, not 2 points. Okay, for Fibonacci projection, you need to get at least 3 points. Okay, you can see here. Okay, starting point, which is 1, 2, and connecting ending is 3. You need to look for like this kind of the zigzag. Okay, at least 1, 2, 3, and then we're going to project here. Okay, and the projection percentage that we are using, we have 61.8, 78.6, or 100% projection. Or you can use like 127.2 or 161.8 or even like 200. Okay, the both tips is that you need to look for the zigzag. Okay, and then going to draw like this. We use Fibonacci projection, for example, if price make a new high, or this is a lovely goal that I shot. Okay, we want to make a new high. I mean, like if price break above the new high, maybe I use US 30. For example, we're going to draw Fibonacci projection. What we need to look for? We need to look for at least the zigzag. Look like that, right? And then you can project. On a trading wheel, we use Fibonacci projection, which is 10 braid 5th extension for Fibonacci projection. Okay, we use Fibonacci projection, projecting where the price going to like stop if price break above. For example, here. Okay, what I can use here, first I can use projection, because there's like 3 dot, 1, 2, and 3, right? You can use Fibonacci projection to find the level. It's here, 1, 2, and 3. You can leave it like that. What we can use, and I can use the retracement level, because I have swing high and I have swing low right here. So you draw Fibo from your left starting point to ending point, which is 0. Okay, what you can see here, what you can see, what we can use here. Okay, now I might want to identify this is my resistance level. Why? Because I have 50% Fibonacci projection, and then I have Fibonacci retracement level right here. Okay, and then you can see that price is leg up. Even like this one might get like, you know, rejection. Okay, rejection, and you can see the price is close below your Fibonacci retracement, which is 78.6%. Go back up again and continue to fall down. You can see continue to fall link here. So this is Fibonacci level that we are using. Okay, guy can YouTube, what is this? Okay, just continue. Okay, or our Fibonacci projection, you need to find the zigzag, right? Again right here. So now for the US 30, okay, you can see that price already break a new high. Now what we can use, what I can see, you can use projection, you can use the extension. First, price already break above, this is the high, right? Now we use the extension because we want to see where the price is going to stop. We cannot find the resistance anymore because these are all-time high. Okay, this is a daily time frame. To swing high here to swing low right here, what we can see that, okay, we can forecast or projecting that this is gonna be your first resistance level based on the extension level. Okay, this one is gonna be second resistance in this case. I can use the projection. Why? Because I already see that 1, 2, and 3. Then you can use Fibonacci expansion to find Fibonacci confluence level. Okay, using this one, connecting 1, 2, and 3. Really lovely. What you can see that our first resistance somehow have Fibonacci confluence, which is somewhere close or line up together. We have projection 61.8 Fibonacci projection, and then we have Fibonacci extension right here. Now, can we use Fibonacci expansion? Okay, let me just leave it for, okay, for our second resistance we have a projection 78.6% and extension 161.8. okay, so I will just leave it like this, and I use the extension to make it cleaner, and then you can see. Okay, oh sorry, I might have to include ending and starting point right here. Okay, and we also can use Fibonacci expansion. No, can I see? Okay, now I can use Fibonacci expansion. Okay, because price is retraced, okay, more at least 50% right here. So you can see that our second resistance, okay, our second resistance, the source it might be somewhere is here. Somewhere is here, meaning that if price go all the way up here, you see the rejection, you see the price action, we can short to, you can short at this level, and then you can keep the expansion because price is retraced 50% right here, and then continue to go up, and then you can use the expansion that level. Okay, do you guys have any question? Okay, you can just send me the question if you have. I just remove one because there is so many tapping here. Okay, I cannot see if you have any question. Again here, now price is reverse rising. This is gonna be your first resistance, your first resistance right here. Okay, why we use Fibonacci projection? Because we want to project where price is going to, like, you know, revert or stop. In this case, price already break above your high, going to make a new high. Okay, and then you can do Fibonacci projection, and then we combine with Fibonacci extension right here. Now we forecast for the resistance because there is no resistance anymore. Okay, do you guys have any question so far? Okay, it's quite straightforward. Again, I look for another, I think US 500 also make a new high. Now we already know that this is our high. Okay, what we can use here, again, if you want to use extension, you're not going to draw your extension from here. Why? This is not your recent low, this is your recent high. Where your recent high and recent low is here. You need to draw from this, your high and your low here. Okay, if price break above this recent high here, we're going to use Fibonacci extension, which is this level, meaning that we forecast this is gonna be our first resistance. This one is gonna be my second resistance. Okay, no question. Okay, can we use any other idea in validation? Yes, you mean, okay, okay, let's say, yes, you can. For example, let's say we short here. This is our sell entry, for example. You can do Fibonacci extension, because we use Fibonacci extension first to find the either support or resistance. Okay, if you cannot find, okay, like this is their make or time high, or you can do Fibonacci extension or Fibonacci level to place your stop loss, place your profit. Basically here, in this case, we're going to sell at this level. You're gonna sell here. Where you're going to put the stop loss, you know that if we sell here, if price break above our sell entry, okay, and then you know that, okay, above our sell entry, they're gonna be Fibonacci extension. So you're going to place your stop loss above your extension level, which is this stop loss. Okay, your stop loss here, for example, here you place here, but now we sell here, and then you know that, okay, you already see that, okay, price break above already. Okay, and then you know that you're going to have another sell entry somewhere around here, meaning that price break above the resistance. Okay, you're not going to hold your sell position up to here, no, because one price break above your sell entry, which is your resistance level, is going to be, it's become your pullback support, meaning that if you have another sell entry over here, here, okay, one price falling, okay, you need either you close with break even, either you have double lot size. Okay, like let's say you put here one lot, you have another sell entry, two lot, price falling halfway, your balance should be 0, okay, or break even, you should close, because from here it's going to be your pullback support level, meaning that price falling here gonna bounce up, continue to go up. For example, gold. What we can use for gold, before price, we can do the extension somewhere, I think here. Let me see first, I forgot, like here. I use the extension here, okay, on this one. For example, here. Now, back to extension. Okay, let's say this is our high, right? This is our high. Price break above. Okay, let's say you were to short here. You short here, you sell here, for example. Selling, but you're not close. Price break above. Okay, break above here, you can see that first they break above, you can see that. Let me move back to here. Here, for example, here we use extension from this swing high to swing low here. Okay, you can see that price is stop. That's why you will sell at like 25.07, because we use extensions to forecast first resistance, second resistance. Okay, this is a daily time frame. I go to H4. This is how H4 look like. Okay, in H4 time frame here, you can draw Fibonacci extension based on daily. It will look like that. But in H4, you can keep the level. But what we can use the projection, because we have 1, 2, and 3, right? They like that. You use a projection. connecting point 1, 2 and 3. What we see that, okay, seem like this our resistance zone. We're gonna short, let's say if we short here, price break above, what you see that from our resistance, okay, break above here, you can see that they pull back, right? They can pull back here and then continue to go, become your overlap support. Now let's say you sell, and then now you can have another sell entry for the extension. You can see that here, price falling because of our extension and the zone, right? You can see that they're falling here. Then you should close already. You shouldn't from here and then you think that okay, price will just from here falling all the way for down. No, you can see that they're just falling from here and then continue to go up because they already break above the high, right? This is the high. Okay, from the resistance, it becomes support, right? And then you can see that. That's why if your idea invalidation, then you should know that you should close with break even or cut loss a little bit, and then you can open the buy. Okay, this is now one price break above your extension, it invalid, and then you need to find another like extension. Okay, you can see that. Then now they continue to go up. Okay, and now we need to find one price make a new high, the new low, and then we need to like find the level again. Now what we can use a projection 1, 2 and 3, and then we might forecast this might gonna be the first resistance. Can we use the extension? Sometime in H4 time frame we use the extension here. So interesting. Our extent like is a little bit above. Sometimes with 2 tiny we're not gonna use. You can go either like one time frame higher. You can go to daily, or sometimes you cannot draw. You can even go to weekly to get the level. Okay, you can use this my extension I already used. Okay, so this is gonna be first resistance. This is gonna be our second resistance, like here. My second resistance right here. If price break, gonna stop here or not, we need to see. Price already break above 127, you can just leave extension 161.8. okay, go back to H4. Now from this one it become your support, right? The resistance break above, it becomes support level. That's why a lot of people buy from this level, or you know that this your buy zone, right? Use the buy zone. That's why people buy up from this level and then continue to go up. Now one price break below here, it become your resistance. From the support it become resistance. Then we're not gonna use this anymore because price is falling. One price is falling, make a new high. What we can use the retracement swing low to swing high here. Our retracement level. But here you can see that price is reject retracement 61.8% Fibonacci level, which is close to our support level. This is our support. You can see that this is our support. How we get the level? Can I use projection? Yes, 1, 2 and 3. No, it is fall below our projection 100%, so we don't use projection from that level. Okay, in this case, now price is retraced here. I can use extension. Then you can see that of course the zone is quite big. This is our support level based on the extension here. Okay, like one price break below your starting point, which is 100% here. Price falling to our support level 61.8, and then price close above our extension 161.8% right here. Okay, and then reverse. Okay, this is how we use Fibonacci. Now go back again. Price already bounced off from that level. Now I see the swing high and low here. Okay, you can use retracement. Okay, you will see that, okay, here we have first resistance level. Okay, because 61.8%, right? We'll see. You can keep the level. And then can you see the price break above? One price break above our resistance level, you can see that pullback. It become our support, right? Here. One price pullback, break above pullback. We're not gonna use now. If price break above this level, what we can use? We need to use the extension. We need to forecast. Okay, this gonna be potential first resistance. If price break above 25.30, should go to like 25.48 or 50. That's gonna be like the next resistance level. I can use a projection 1, 2, and 3. This is my zone. Okay, first resistance here I have projection 61.8. For the first resistance, this is gonna be my first support. This one the high, first resistance. Second resistance right here. This is the zone, which is 2550. We have projection 78.6 and extension 127.2%. You can see that, right? Used to be support. You can see that support level go up, almost reach the resistance, falling again, and then continue to go up. Let's say if they break first resistance, it's gonna be our pullback support level. I think price is ranging. Now they come back to the support level again, right? Now one price make a new high, you need to draw from where your level. You need to get from this swing high to swing low. Always pick the recent high and recent low. Okay, and then you will use the Fibonacci. Hi guys. Gold was ranging, and then now price cannot close below 24.73. From here we already know that price five high, right? Okay, you can see that used to be support, break below become the resistance. Now come break above, pull back, it becomes your support level. And then we need to remove all Fibo, we draw again. Why? Because this is gonna be our high and our low here. Okay, and the next resistance somehow had extension is right here, 1544. Here you might need to adjust, okay, based on H4 time frame. Okay, now it's pull back, it becomes support level. Okay, let's see. You to buy here, you might get stop out. Okay, price. Now we need to draw again. Every time price make a new high, your high here, your low here. Okay, you can see that price might reverse and then falling at 50% level. This one we might draw for first resistance. Our second resistance is here. You draw here, you get the sell entry here. Based on the body and the wick, you could highlight the level or the zone. Okay, from here you might get the sell entry here. Price falling. Okay, now it's falling, right? From here they're falling about how many pips? 1507 to about 70 pip and go above the resistance. Now it becomes support. Okay, you see that from the resistance. Okay, from these two candle, price close above our support level, gonna be above support level. Okay, now what I can do, if price break above my first resistance, I'm using the extension from swing high to swing low here. Okay, I forecast here might could be the first resistance, or we'll see how that if I want to sell here at 25.36, Okay, and then the second resistance we have the extension 161.8, meaning that if price break above, okay, I can use protection 1, 2 and 3 here. Okay, our protection, this is the zone. Okay, one zone here, second zone another somewhere around here. Okay, if price break above, boom, break all this because of the news, right? But go to the lower time frame first because I'm at H4 time frame. Okay, you can see that in H1 time frame, price have the rejection where at this level, meaning that they break above. Okay, they break the high here. Okay, they reject where our resistance level, meaning that you should already know one price close above the rejection here. Okay, you sell and then you should close at the where the resistance, it become your support level, right? We can see that they reject how many from here, 554 all the way down here, you to sell because this is gonna be price come to this like this week for the support level, right? In H1, like this level, this level, and then from there now break our first resistance, go all the way to 2548, the zone rejected a little bit and then continue to go quite high. Okay, you can see that second resistance break above, pull back and then continue to go up. Okay, you can see that. So every time price make a new high, then you need to find the level again. Okay, hi guys, nice to see you here. No more. Now how I sell at this zone in the lower time frame. Okay, or let's say here this is the high based on H1. Let's say I want to see that if price break above like 2586 or 2590, that's gonna be the high. You can do the extension, then you see that okay, this is gonna be your next resistance, gonna be another next resistance level. Okay, can we use a projection in H1 time frame? Okay, you can draw Fibonacci projection or Fibonacci retracement on the lower time frame, M15 or M30 or H1. You can draw. Okay, if you're a scalper, you can draw on the lower time frame. I just use H1 in this case. You can use the projection 1, 2 and 3. What you can see here, I have like 50% projection, 61.8 projection right here. It line up with extension. Okay, let's just look. I stop here. Okay, you can see that I short here. Okay, that is gonna be my sale entry, right? You can see that short here, price falling, I think at least 100 pip. Okay, we target 100 pip here from our resistance. This is our resistance level, right? This one. Now it become our support level, pull back support. That's why break above. Okay, you need to sell, you close the entry and then you buy up. Now it become your support level. Okay, of course this is gonna be the zone or we bet on the wick here and then continue to go up. Okay, now the next zone that we are looking is this one, the next resistance level. Okay, then you can see that price back. No, price is not break, meaning price cannot close above. So this one you can keep it like that. Now we find the level. This is going to be our resistance level, right? Because price cannot close above. First resistance here based on the wick and the body. You can highlight the zone. Okay, let's say you short here because price go to the extension based on swing high to swing low here. Okay, let's say you just break above, for example here, you short at this level, this one. Either you place the stop loss above your extension here, above 25.91. you should place above like 25.96. Don't put your stop loss exact at 25.95. you will get stop out. Okay, because whatever ending with 0, ending with 5, all right, there will be a lot of traders, they will sell at the level. Okay, in this case we use the extension to place our stop loss in this case. Okay, then you place the stop loss above the Fibonacci extension, and then you short. Now price is falling. What we can do now, you can use Fibonacci retracement to find the level and get your take profit. I will leave here. Okay, now you want to look here. This one either you put here for your first support based on Fibonacci level, like 23.6%, right? But price did not. You just read like that. I think they are waiting for the news. You were to like falling, coming another more than 100 pip. Usually I will put the TP here at the body on my left. This is gonna be my take profit. If I want to run trend, you want to hold all the way to like 25, 31 or 35 for like a pullback support somewhere around here, and then I will use the tailing stop loss, like use tailing. Okay, or you can use like set to break even, but I don't like to shift my stop loss to break even here, because you can see that price falling more than 100 pip, and then you pray for price going down here, but then again price is reverse and hit your stop loss. Maybe from here you earn 1,000, hit your break even, maybe you earn $50. So to me, for gold, I always make sure that I put the TP at the body of the body of my like support level. You can see that we sell here, price hit the TP and then reverse, you can sell again. Stop loss is here. Second sale, if I have a second sale, I will reduce my loss size. For example, if you want to pay a ranging, first sale I put 1 lot, price came here, maybe I earn like 100 pip, 1,000. If price reverse again, I want to have a sale here, I will put my 0.5. Okay, because if price hit my stop loss, I may lose like second trade I lose 500, but I still have profit another 500. I don't trade like ranging 1 lot TP. Second time I want to sell, I put like either same lot size or like double lot size. No, okay, because I want to make sure that I earn money from the forex. So this is how you trade ranging, but also depend on you as well. Okay, this is how you use Fibonacci extension to find. In this case, we find the extension, we find the resistance level. Shall we go to the lower time frame, M15? This is how M15 look like. M15, you can see that you can do the extension here. Okay, let's say you want to short here and you want to hold. If price break below your swing low here, your TP you could put here for your TP1 at the extension 127. The next TP you can put here for your TP2, but price trigger your TP1 here. Okay, either you close half lot size and then you want to run to like 61.8, but then price is reverse. Okay, able to look. Oh no, you can see that here. TP1, you use the extension for your take profit TP2. Let's say you want to buy up from this one. Okay, you place your stop loss below your extension 161.8 for the stop loss for the buy entry. Okay, and then price is going all the way up. This is always your resistance level. Let's say your resistance level here. If you want to sell again at this level, okay, you want to sell again. Let's say you buy TP1 here, next resistance maybe for aim for TP2 for example. Okay, because we buy up, we buy here. Of course, TP1 will be always at the resistance level, because we sell at the resistance, we buy at the support, right? Okay, let's say you see the rejection and then you buy, and then you can use another, this one could be your TP2 at the extension. This could be your TP1, for example. Okay, and then you can see the price did not hit your TP2. Okay, they hit your TP1 here and then continue to fall. You can use the Fibonacci on the M15 as well. You guys have any question? Or you have any pair you want me to look for you? So basically Fibonacci retracement. Go back again. Okay, we use Fibonacci retracement this number. Okay, 22 by 6, 38.2, 50%, 61.8, and 78.6%. Okay, for okay, look for you. Hang on. You can. Okay. This current price. Now we can use Fibonacci retracement. Okay, from swing low to swing high here. My first resistance is right here, which is close with my 50% fib level. My second resistance, I'm gonna pick at this level. Second resistance. Somehow I have 50 and 78.6% Fibonacci level. Okay, so this is gonna be my first resistance. Okay, you can see that it oh sorry, this is M15. No, I'm not gonna draw on M15. Look at H4 instead. I think they do the triangle here, right? You can see that they haven't break for the UCAT. You buy or sell based on this level. This is first resistance. Okay, price is just ranging. So price is just ranging. You can see that. Don't trade UCAT. For the C trader, I'm not sure because I trade a C trader, but I connect my C trader on a trading view. Okay, if you have the C trade, if you trade with the IC market and then you use the C trader account, you can connect your C trader on a trading view and then you can trade. I think it's easier. Okay, because I'm seldom use all the tool in a C trade. I just use to place the order only. Okay, now so for the UCAT, price just sideways. You can see that. Don't trade, but I can find the level for you based on first retracement. We use Fibonacci retracement level. Okay, what we can find here? This is okay, this one I'm gonna use the dotted line. For resistance I have right here. It's not close with any Fibonacci level. That is okay. Don't draw Fibonacci and then based on Fibonacci then you adjust. Okay, this is the first resistance and then you say this is second resistance. No. Okay, find the key level first and then after that you see that whether your level it line up or close with any Fibonacci level. Second resistance, then you leave 61.8. H4, what we can use? Okay, now this is my recent low here and this is my recent high, right? You can use Fibonacci from your swing low to the swing high. I think this one should be at 38.2% fib level. You can see that Then if you were to trade, oh, this is going to be your first support. Sell here or you buy up. If you were to buy here, and then you can see price ranging, you should exit your position. Okay, you could keep this, you are like the, either you say first resistance, this is second resistance. Okay, based on this one, price pull back, and then how we get this level exact. Oh. Here, right? You can see that buy here. When price ranging, we should exit where our second support. That could be here, and this one 38. That will be 38 and maybe 78.6. Okay, here. Okay, you can see that. Then we keep the level. You guys can see. Okay, so my first support, I have 38.2% Fibonacci retracement. I have 78.6 for my second support. Okay, can we use a projection? 1, 2. You can use a projection. 1, 2, and 3. My second resistance, I have 61.8% projection, and you can leave like that. Your projection exact line up. You cannot see, put on top. Okay, meaning that if price break above here, this is gonna be second resistance. I have my protection right there. Okay, can I use extension? Swing high to the swing low. Okay, and then my next resistance, I have extension close to extension 161.8, and then this is gonna be my resistance zone. Okay, you can see that if price break above here, break above, pull back, target here. If not pull back all the way up here, then here gonna be a pullback support level. Okay guys, that's all. That should be end of today. 2 weeks later, a week later, it's gonna be Fibonacci conference. So basically, we will use all Fibonacci that we have learned together, and then find the level like what I'm like showing you guys here. Okay, all right guys, thank you so much for your time. I will see you guys again in 2 weeks later. Okay. Happy trading. Just be careful for the high impact news for the entire week. Okay, bye for now guys. Thank you so much for your time. Take care.